Hi there. Good morning. My name is Victor Louis, and I'm the head of investment strategy at Sankore Global Investments. This is your weekly financial markets roundoff. We'll start off in the US, where the market rose on Friday to really cap off a very strong weekend in positive territory. The Dow Jones Industrial Average gained 0.34% to close above the 40,000 point mark for the first time in its history. The S&P was up 12 basis points, while the Nasdaq added 7 basis points. Now, for the week, the Dow was up 1.2%, notching its fifth consecutive weekly gain. The S&P and the Nasdaq rose 1.5 and 2.1% respectively, securing their longest winning streak since February. The strong performance last week essentially propelled all three major indices into positive territory for the second quarter. Now, a combination of tepid economic growth and also decelerating inflation have basically acted to provide the catalyst for the strong performance that we saw last week. CPI came in last week at 0.3% month on month against an expectation of 0.4%. Year on year, that number was 3.4%, essentially in line with expectations. We also saw retail sales last week coming flat for April. The market had expected retail sales was going to be a jump of 0.4%. So obviously, this weaker than expected data on both fronts essentially renewed sentiment about the Fed cutting rates sooner rather than later. As a matter of fact, if you look at the Fed fund futures, it's now pricing in a 75% likelihood that we would see a rate cut, in September. This is up from about 65% likelihood that we had seen, the previous week. So again, this just tells you that, that inflation data that we saw last week, also the retail sales number that we saw last week, the combination is really creating very strong impetus within the market, really, that the Fed will start to move on rates sooner rather than later. Going into the remainder of this week, really, it's going to be really earnings, and earnings in particular, because we have NVIDIA that will be reporting this week. That number, how it turns out, really has a very strong potential to really, push market direction for the remainder of this week. Also, the Fed minutes from the April 30th meeting, that will be released on Wednesday. So obviously, participants will be looking for even more clues in those minutes to get a sense of how the Fed is still thinking about inflation, particularly in the light of the recent numbers that we have seen. Also on the macro front, we'll be seeing jobless claims data, data on existing home sales, and also durable goods data. So all of these data points, plus the earnings that we'll see from NVIDIA, will prove very, very crucial in determining market direction, really, going into this week. Over in the EU last week, milder than expected impact from the Red Route trade disruption essentially is seeing inflation falling faster than expected, and this has led the European Commission to revise its inflation outlook for the single currency bloc. It now expects that inflation this year will drop to 2.5%, and it will be about 2%, essentially hitting the ECB's mark next year. This is a downward revision from its February estimate, where that expected that inflation was going to be 2.7% this year and 2.5% next year. We've also seen growth kind of tick up a bit in the EU. A 0.3% quarter-on-quarter growth was what we saw the first quarter of this year, and this was really boosted by high exports, a rise in tourism, and also an increase in consumer spending. Inflation in the EU has dropped quite significantly. I mean, since it peaked at about 10.6% in October of 2021, we're currently around 2.4%. And like the European Commission has revised, we expect that number will be about 2.5% this year and trend to 2% next year. And growth in the ECB is actually in the Eurozone actually is expected to firm up and continue to be on that path as the ECB starts to normalize or cut interest rates. Over in China, data released on Friday shows retail, essentially mixed bag for the economy, if you will, right? Retail sales slowed to 2.3% from 3.1% that we had seen in March, and also a 3.8% expectation. However, industrial production rose 6.7% year on year. It beat the expectation for about 5.5%, and also a pickup of from the 4.5% that we had seen in March. Also, fixed asset investment rose 4.2% for the first time in 4 months, and also, however, was lower than the 4.6% that had been expected. Real estate investments steepened its pace of declines. It was down 9.8% year on year. for the first 4 months of 2024. Also, last week, as regards China, we saw the Biden administration roll out some tariffs, particularly targeting EVs and lithium batteries coming through from China. Whole idea really is to try and protect the US from, cheap goods that would be likely dumped by the from balance. This just applies to only about 18 billion worth of the imports from China. The US has at 2023 imported 427 billion worth of goods. So this is just only about 4.2% of goods. So we don't expect that the impact to be significant. What I think is that this is likely to only just delay the influx of Chinese EVs into the American market. I mean, these EVs are still significantly cheaper by the Chinese makers, right? For instance, there's a BYD EV called the Seagull. It costs about $10,000. Even with a 100 state-owned enterprises and local governments to buy up the inventory and also kind of be able to make those homes more affordable to would-be buyers, if you will. That sector is still really, really very, really good. Home sales plummeted 47%. Inventories are hovering at about an 8-year high. So again, this is some idea that China has actually tinkered with in the past, but with not much of a success. Now, if you look at the state-owned enterprises that it's looking to use, these enterprises are really bogged down by quite a lot of debt. So it really remains to be seen how they are going to manage their between 20 years. It's looking to raise about 1 trillion yuan, which is the equivalent of about $138 billion. Our sense is that the indication is that it's raising this money for infrastructure project. Our sense is that it's likely raising this money to help plug, this property gap and this property challenge that we're seeing in China. It remains to be seen how things pan out on that front. And over in Nigeria, the fixed income market was largely cautious last week, essentially ahead of the MPC meeting that we're having today and tomorrow, outcome of which we'll see in the treasury bills market. In spite of the low liquidity levels, the market was largely mixed. A few trades consummated. Nevertheless, yields, TBO yields declined by about 6 basis points on average. The bond market really started out quiet last week in anticipation of the outcome of the auction that was held last week. But again, the auction was pretty much in line with a lot of the expectations, so we didn't see much of a major reaction in the secondary market. However, momentum slowed significantly towards the end of the last week in the bond market, obviously in anticipation of the MPC meeting today, tomorrow. We also saw inflation data come through last week. Still an increase, nevertheless slower than the sort of increases that we've seen over the last couple of months. So obviously, this is the 16th consecutive upward trend that we're seeing in inflation. The number came in at 33.69. Obviously, this inflation number, coupled with the recent weakness in the naira, has created some concerns around how the policy committee, that's the Monetary Policy Committee of the Central Bank, will react at its meeting today. A broad section of the market still expects that we'll see a hike. Some sections of the market expect that rates will be held constant as the committee essentially assesses the impact of all of the hikes that it's carried out so far. It really remains to be seen. Nevertheless, it's important to note that the outcome of this meeting will prove very, very crucial in determining market direction, at least in the near to the medium term. On the data front, we expect Q1 GDP will be released on Friday. Also, obviously, the outcome of the MPC meeting, while there'll be a primary market auction, treasury bills auction essentially on Wednesday. So quite a packed week, for the local market. We will basically look out to get that data and also bring the information to you as they come out. So for the global markets, obviously Nvidia earnings will be very crucial. The outcome of the MPC meeting this week would also be very, very crucial in determining what happens to the market. So that's pretty much it in terms of our updates. Thank you very much. Do a productive week.